On Business Incorporated today, Central Bank of Uganda hikes rate for the 4th consecutive time. Egyptian pound, the latest African currency to lose value. And transport unions in South Africa begin strike today. Good afternoon. Welcome to Business Incorporated on Channels Television. I'm Edin John McQuarrie. We begin as usual with market numbers, which is what we normally do. And we start in Africa, where we see mixed sentiment displayed at the major markets on the continent. And the day after Geregu, which is the first power generation company in Nigeria, was listed, the oil share index dropped 0.02%. South Africa is, however, in the green, 0.37%. And going over to other parts of the continent in Northern Africa, we see Egypt is doing really good there, almost 1% at 0.88%, or more than 10,000 in points. Kenya really deep in the red. It closed yesterday 1.87%, getting close to 2% there, and then that's another market to look out for. After the elections recovered, but now we see it back in the red. Now let's move to the Middle East now and see also mixed sentiments in the Middle East. United Arab Emirates are positive, however, but Abu Dhabi is down 0.05% at 9,891.98. Dubai is also down 0.07% at intraday. Saudi, however, is in the red. It's in the green, 0.23%, leading there, almost the same with what's going on in Qatar at 0.20% at over 13,000 points. So mixed sentiments in both markets at this time. We leave Africa and the Middle East to Europe now, and we see that digital payment methods are advancing throughout Europe, be it for your debit or credit cards, with your phone or your smartwatch. Never has it been so easy to go through a supermarket checkout without handing bills. So why do we see Austria pushing for cash payments, cash transactions? Well, thank God we have Chris Kober joining us now to tell us the details of that. Hi, Chris. Good afternoon. Seems unusual, but why is Austria's central bank doing this at this time?
The move is part of an information campaign on what to do in the case of a blackout. Fears of sudden and prolonged loss of power have been growing in Europe as Russia has been weaponizing energy in the wake of its war in Ukraine. So the head of the Austrian Central Bank says in the face of multiple crises, the bank wanted to raise public awareness as well as strengthen and secure the significance of cash within the Austrian society, as he put it. A former official of the central bank said, in time of crisis, it's wise to be prepared, to have candles, matches, water, and significant amounts of cash at home in case there is a blackout, which would prevent ATMs and digital payment methods from working. Cash is barrier-free and crisis-proof, he said. Now, when it comes to how people pay for goods and services, Austria is a bit different compared to other European countries. Whereas in Denmark, people use digital payment methods to pay for the smallest items, and Sweden even aims to be the first cashless country in the world coming next year. The clocks are ticking a bit differently in Austria. When strolling around Vienna, paying with card or phone is fine, but outside the capital, you are advised to carry cash with you, as some shops or other establishments will only accept bills or coins. Now, of course, digital payments are advancing in the country as well, but apparently not as quickly as in other places, and the central bank's campaign seems to be supporting this.
Very interesting, Chris, at a time when we thought the world was going cashless altogether. But what does this campaign, what does it look like?
Well, first of all, a number of institutions have signed up for it. The central bank, as I mentioned, Austria's Mint, there's unions and retiree representatives supporting this initiative. And there's an online platform called Eurocash 360 Degrees, and the central bank is saying that the digital euro, which the European Central Bank wants to launch soon, would only complement cash. So again, supporting coins and bills there. Austria's Mint says having money printed within the country is saving jobs at home, and the organization is addressing the biggest concern people might have when it comes to paying digitally, which is data security. The best way to prevent data from being stored somewhere and possibly stolen is people paying with cash, the Mint says. There are even TV ads that have been produced to promote this idea. Now, this campaign does illustrate a dilemma that the financial sector is in. For stability reasons, it is wise to rely on more than just one payment, so something else besides digital payments. But that's less profitable to banks, and they are under heavy pressure to up their profitability. Banks are trying to achieve that by increasing efficiency, something that digital payments play an important role in. Also, banks can charge fees for credit and other cards, so it provides them with extra revenue. Yet, when it comes to Austria's financial institutions, they haven't really dared to abandon the traditional and possibly less lucrative ways. The amount of cash machines in the country stands at 9,000, and it has been stable for years.
Very, very interesting, Chris. But let's look at German stock market now. It was on the path of recovery, but seems that has halt. That's on the hold now.
It looks like yesterday could have been just a bump in the road. German stocks are continuing their recovery today, with the blue chips index DAX advancing around 0.7% this morning. Investors are hoping that central banks' future measures to combat record inflation may be less drastic than what they have been in recent weeks, and there are arguments in favor of that. Weak readings on U.S. factory activity and job openings have been feeding speculation that the Federal Reserve's strict tightening drive was having an effect, and that further hikes of interest rates could be less steep.
All right, Chris, thank you so much for that. We'll certainly do it again tomorrow. All right, let's move to other markets. We'll stop by in Asia, where markets were mostly higher today after Wall Street's two-day rally fizzled. And OPEC Plus agreed to cut 2 million barrels per day to shore up prices. All futures were slightly up during Asia's session. Let's look at the numbers now. We start with Nikkei 225 in the green, almost 0.5%. It's 27,120.53. Shanghai in the red, 0.55%. While Hong Kong in Hang Seng Index is 5.90, almost 6%. We see that 18,087. Looking at other market now, the top picks are at 0.5%. The Kospi in South Korea rose also more than 1%. The Nasdaq was up more than 3%. And then in Australia, the S&P AX 200 closed at a flat 6,817.50. Hong Kong's Hang Seng, we saw that number there. And mainland China markets are still closed for holiday. It's all for this week, so we don't expect to get market numbers from China. In the United States, U.S. stock futures dipped on Thursday as massive rally to start the month eased, with rates ticking higher once again. Dow Jones Industrial Average futures declined, and there we see the number there. It declined by 0.45% at 30,175. S&P futures was, however, on the flip side, 0.50%. Nasdaq futures, the same thing with what we have with Dow Jones at 0.45%. The benchmark 10-year rate climbed more than 1 basis point, which is more sensitive to monetary policy changes. It rose by 2 basis points to 4.14%. Wall Street started the week on a high note, with the S&P 500 staging its biggest two-day rally since 2020. Stocks fought to keep the winning streak going on Wednesday, but ultimately fell short. Dow closed about 42 points lower. S&P 500 and Nasdaq Composite slit 0.20 and 0.25 respectively. Investors continue to monitor economic data to see if inflation is cooling off or if the Federal Reserve's rate hikes are pushing the U.S. closer to a recession. Another markets now, the oil market prices rose for a fourth session with Brent at a 3-week high after OPEC Plus agreed to further tighten global crude supply with a deal to slash production by about 2 million barrels per day, and that's the largest reduction since 2020. Brent crude futures for December settlement rose 22 cents to $93.59 a barrel, and that's after it settled 1.7% higher in the previous session. U.S. West Texas Intermediate crude futures for November, however, gained 22 cents at $87.98 a barrel. The agreement in OPEC Plus comes ahead of a European Union embargo on Russian oil and would squeeze supplies in an already tight market. And of course, that is expected to add to inflation. Metals market now, gold prices edge higher as Treasury yields retreated, although gains were limited after stronger U.S. economic data bolstered expectations. The Federal Reserve will retain its hawkish narrative. That's the latest factor driving the market. Spot gold was up 0.2% at $1,719.19 per ounce, and U.S. gold futures rose 0.5% to $1,728.50. Benchmark U.S. 10-year Treasury yields eased after recording its biggest one-day jump since September the 26th, and that happened yesterday, while the dollar index was steady. Lower yields decreased the opportunity cost of holding gold, which pays no interest. Looking at other metals now, spot silver fell 0.3% to $20.64 per ounce. Platinum was steady at $919.11, and palladium rose 0.7% to $2,262.32. Let's see what's happening on the African continent, starting with Uganda. The Uganda Central Bank has increased its benchmark lending rate for the fourth time in a row to 10%. It was at 9% before, as the East African nation continues to tighten its monetary policy to curb the highest inflation in a decade. Inflation hit 10% in September from 9% the previous month, reaching double digits territory for the first time since 2012. Well, Mr. Michael Antigi Ego, the deputy governor at the Bank of Uganda, says that a tight monetary policy response was needed for calm price pressures. Economic growth is expected to remain below its potential, and the risks of global recession and constrained demand for export will likely weigh further on domestic economic growth. Still not good news as we go to Egypt. The Egyptian pound has become the latest African currency to depreciate to a record low against the US dollar after it slipped to an exchange rate of 19.6736 for every greenback on the 4th of October. Before this, the currency's previous record low exchange rate of 19.6725 per dollar was last seen in December 2016. Other African currencies that have struggled against the US dollar in 2022 include, of course, the Nigerian currency, the Naira, which recently touched a new all-time low of 375. That was like yesterday for every dollar. In September, Bitcoin also saw this depreciation. Egyptian's birr, official and parallel market exchange rate had grown to a new record high. Ghanaian cedi also, as well as the African rand, have also depreciated significantly against the US dollar this year. The pound's depreciation came as Egypt is getting closer to securing a loan from the International Monetary Fund and the IMF loan, as well as $22 billion that has been pledged by a rich Gulf state, is expected to help Egypt deal with the energy and food shocks stemming from the Ukraine-Russia military conflict. However, before approving the loan, the IMF will likely ask Egypt to adjust the exchange rate just as it did in 2016. At that time, the global lender insisted that the pound had to be devalued before they could get the loan. And still in Africa now, in South Africa, that's where we go to next. The United National Transport Union, which represents some of the workers at South African ports and freight rail operator Transnet, have started a strike to demand a bigger wage increase from the state-owned company. Transnet yesterday doubled its pay increase offer to 3% to head off the strike action. The proposed raise is well below annual inflation of 7.6%. The strike is over a wage dispute in a move that could halt the export of key minerals and other cargo. Transnet has been operating below capacity due to a shortage. And quickly reacting to that, we have a reaction from Transnet. And Transnet argues that the actions taken by the union to down tools are not only illegal, but also unprotected. The rail company argued that UNTU did not follow the operational and financial challenges. Transnet's latest improved offer includes levels G and H employees having the salary increase of 3%. Workers on levels I and J would get an increase of 3.5%, and workers on levels K and L would see an increase of 4%. But obviously, this doesn't sound acceptable to members of the union. Let's take a break now. When we come back, we do have more stories and a conversation for you on the other side of Business Incorporated. Just stay with us. You're welcome back. You're still watching Business Incorporated on Channels Television. Let's head to the commodity space now. And we're looking at palm oil. Well, global palm oil consumption is expected to increase by 3.54% to 82 million tons between 2023 and 2024. And that's following the lifting of export restriction on Indonesia. Although price initially slowed relative to demand, the recent high demand has caused a surge in palm oil prices. To join us for this conversation, we have Chizoba Enwazo, the research analyst with Financial Derivatives Company. Hi, Chizoba. Good afternoon. Thank you so much for your time.
Thank you for having me.
So, talking about palm oil, we know that Nigeria is supposed to be a major player when it comes to palm oil exports, palm oil production. Paint a picture for us where we are now. If we talk of price surge and all that, are we benefiting from it?
Nigeria had the opportunity to benefit from the ban that was placed on Indonesian exports that caused shortfall in the market, but due to the low production in Nigeria, the country could not take advantage of this opportunity. Nigeria's production is about 1.4 million metric tons, which is lower compared to Indonesia, which produces about 44.5 million metric tons of palm oil. So in this price surge, Nigeria is likely to face the tailwinds and the headwinds because Nigeria is a net importer as well as an exporter. On one hand, Nigeria could benefit from the price surge because exportation would bring in foreign exchange for the country, which means there will be an increase in foreign exchange earnings and an increase in revenue for the country. But on the other hand, as a net importer, the country would have an increase in import bill and reduced employment. Companies that are still trying to thrive through the economic situations would have to fold up because of the increased revenue, because of the increased spending on importation of palm oil.
All right. So in Nigeria, we do have two domestic palm oil producers, Okomu Palm Oil and Presco. How effective is their production? Are they representing Nigeria well? Are we doing as much as is expected of us?
Numerous policies have been put in place to increase the production from these firms, but because of high cost of production, the weak manufacturing sector and the poor linkage in agriculture, these sectors cannot produce as they should be producing. They are not optimizing their production. So factors like the weak manufacturing sector is affecting the production of palm oil, because if we are able to improve the linkage between the manufacturing sector and the agricultural sector, then they can work hand in hand, increase revenue, and also increase income for the farmers. So these firms are not optimizing their production. They are not optimizing output.
Okay, then we also have the conversation around forward integration into the palm oil value chain. How is that in the sector?
The government has also put numerous policies in this area as well, but of course it has not been productive because of the inefficient distribution of inputs to the agricultural sector. These farmers need high-yielding inputs. They need varieties that can withstand poor weather conditions and also pests and diseases. But because they are not able to access these inputs, they do not have the potential. They cannot meet up with the potential use. They cannot meet up with the potential yield. So producing efficient distribution of these inputs to the agricultural sector would increase yield, as well as mechanization of farming. Farm mechanization in the agricultural sector would also help improve output, because most of these farmers have to go through manual labor to process the palm fruits into palm oil, and this slows down production and also reduces productivity and output. So policies should be put in place to allow farmers optimize production, increase output, and also have access to modern technology that can increase production.
All right, Chinazo, thank you so much for sharing your perspective with us this afternoon. Enjoy the rest of your day. All right, so moving on now, and still staying here in Nigeria, the board of directors of the African Development Bank Group has approved $15 million trade finance line of credit and $10 million transaction guarantee for FSDH Merchant Bank in Nigeria. And FSDH is expected to use this line of credit to provide loans to local enterprises in the country. The $25 million package is to help reduce the trade finance gap in Nigeria by making financial resources available to small and medium-sized enterprises in the industrial sector. The bank will also guarantee up to 100% of non-payment risks arising from letters of credit and similar trade finance instruments issued by FSDH under the guarantee portion. This is supposed to allow confirmation of trade transactions originated by the bank, benefiting local import and export businesses overall. The facility will catalyze more than $200 million of trade finance transactions across multi-sectors, including agriculture, manufacturing, and energy over the next 3 years. And Sudanese authorities have announced a reduction of fuel prices following their monthly review of local production and developments in global oil production. Petrol prices fell from 700 of the currency to 522 for a litre, while diesel prices decreased slightly to 672 from 687. Up until August, Sudan had the 4th highest price of gasoline per litre in the Arab world. The transitional government, dismissed in June last year, approved the full liberation of the fuel prices as part of a package of requirements of international financial institutions to relieve Sudan's $60 billion debt. It's the second devaluation in less than a month and 2 years after the government adopted economic reform policy and devalued the Sudanese pound. It's expected to be reflected in other commodities whose prices are rising because of the high cost of transportation. That's it on the program today. Thank you so much for being a part of it. See you tomorrow. God's grace. I'm Ini John McQuarrie.